Banks do not want you to know what I am about to tell you. Not because it is illegal, not because it is dangerous, but because if enough people understood these 14 crypto secrets, the traditional banking system would collapse. And I am not exaggerating. These are documented facts that financial institutions actively try to hide, downplay, or confuse you about. Let me expose every single one. Secret 1. You do not actually own the money in your bank account. When you deposit money in a bank, legally, you are making an unsecured loan to that institution. The money is not yours. It is the bank's. You have a claim to get it back, but they can freeze it, they can limit withdrawals, they can even bail themselves out with your deposits. This happened in Cyprus in 2013. Bank accounts were raided to save failing banks. Crypto in self-custody? You own it. Not a claim, actual ownership. Not your keys, not your coins, but your keys, your coins. Secret 2. Banks make money by lending your deposits without telling you. You put $10,000 in a savings account earning 0.5% interest. The bank lends that same $10,000 to someone else at 7%. They pocket the 6.5% difference. They are making money off your money while giving you scraps. And you never gave permission. It's called fractional reserve banking. They keep maybe 10% in reserve and lend the rest. DeFi protocols? They pay you the full yield, not 0.5%, 5 to 10% or more, because there's no bank in the middle taking a cut. Banks hate that. Secret 3. Wire transfers cost $50 and take days because banks want it that way. Technology exists right now to send money instantly for pennies. XRP, XLM, HBAR, stablecoins, seconds, fractions of a cent. But banks charge you $50 and make you wait 3 to 5 days. Why? Because they profit from the delay. They earn interest on money in transit. They charge fees at every intermediary bank. The slower the system, the more they make. Crypto eliminates the middlemen. Banks hate that. Secret 4. Inflation is a hidden tax that banks help governments impose on you. When the Federal Reserve prints money, your dollars lose value. That is inflation, a hidden tax. Banks enable this by expanding the money supply through lending. More loans equal more currency in circulation. But Bitcoin? 21 million cap. Forever. No government can print more. No bank can inflate it. Your Bitcoin today will be 1 out of 21 million forever. Your dollar today? Worth less every single year. Banks profit from inflation. You pay for it. Secret 5. Banks can legally freeze your account for any reason. Suspicious activity, large deposit, multiple small withdrawals. They don't need proof, they don't need a warrant, they just freeze your funds, and you have to prove your innocence. Guilty until proven innocent. This is financial surveillance. Crypto with self-custody? Nobody can freeze it, nobody can seize it, nobody can stop you from accessing your money, ever. Secret 6. Only about 30% of crypto users use self-custody. Most people leave their crypto on exchanges, which means they don't actually own it. The exchange does, just like a bank. FTX collapsed. Celsius froze withdrawals. BlockFi went bankrupt. Billions lost. Banks love that most people don't use self-custody because it means crypto still depends on trusted third parties, just like traditional finance. But hardware wallets? Ledger, Trezor, Cold Card. Your keys, your control. Banks cannot compete with that. Secret 7. Hester Pierce, SEC Commissioner, said self-custody is a fundamental human right. Quote, "Why should I have to be forced to go through someone else to hold my assets? It baffles me that in this country, which is so premised on freedom, that would even be an issue. Of course people can hold their own assets." End quote. Even regulators are admitting that banks have no right to be the only option for storing value.
but banks lobby hard to make self-custody seem risky or complicated. It's not, it's freedom. Secret 8. The SEC released a guide on crypto custody in 2026, admitting self-custody is safe. For years, regulators warned about self-custody being dangerous, too risky for regular people. Then, in 2026, the SEC published Crypto Asset Custody Basics for Retail Investors. The guide explains self-custody neutrally, not as a risk, as a choice. Why the change? Because they can't deny reality anymore. Millions of people safely hold their own crypto. Banks tried to scare you. Regulators tried to warn you, but the truth came out. Self-custody works. Secret 9. Banks pay you 0.01 to 0.5% on savings, while inflation runs 5 to 10%. You are losing money every year keeping cash in a bank. Real interest rates are negative. Banks profit, you get poorer. DeFi staking, 5 to 15% yields on stablecoins, real positive returns. No bank middleman, no hidden fees, just transparent smart contracts paying you what your capital earns. Banks don't want you to know how bad their rates are compared to crypto alternatives. Secret 10. Banks spend billions lobbying against crypto. JP Morgan, Bank of America, Wells Fargo, Citigroup. They spend millions on lobbyists telling Congress that crypto is dangerous, that it needs more regulation, that it threatens financial stability. Why? Because crypto threatens their profits. If people can send money instantly for free, why would you pay $50 for a wire? If people can earn 10% yield on stablecoins, why would you accept 0.5% on savings? Banks are not protecting you, they're protecting their revenue. Secret 11. Most Bitcoin lost forever is from exchange hacks and bankruptcies, not self-custody. Mt. Gox, Quadriga XC, FTX, billions lost because users trusted third parties. But how much Bitcoin is lost from hardware wallet failures? Almost none. If you write down your seed phrase correctly and store it safely, your Bitcoin is secure forever. Banks want you to think self-custody is risky. The data says the opposite. Trusting banks and exchanges, that's the risk. Secret 12. Cross-border payments are a $70 trillion annual market that banks control, and they charge you fees at every step. SWIFT handles most international payments. Slow, expensive, centralized. But XRP, XLM, and stablecoins can do the same transactions in seconds for pennies. If crypto captures even 10% of that $70 trillion market, traditional correspondent banking is dead. That's why banks are terrified. Their entire international payment monopoly disappears. Secret 13. Privacy is a human right, but banks spy on every transaction you make, every purchase, every deposit, every withdrawal, tracked, reported, analyzed. Banks know more about your spending than your spouse, and they sell that data. Marketing companies buy it, advertisers use it, you have zero financial privacy. Crypto, optional privacy. Zcash, Monero, even Bitcoin with proper coin control. You can transact without surveillance. Banks hate that because surveillance is how they profit off your data. Secret 14. Bitcoin is becoming generational wealth, and banks have no answer. The Gannett Trust just released a report saying 2026 is the year early Bitcoin adopters start estate planning for multi-generational wealth transfer. People who bought Bitcoin 10 years ago, their holdings are worth millions, and they're setting up trusts and inheritance plans to pass that wealth to their children and grandchildren. Tax-free, censorship-resistant, globally accessible. Banks can't compete with that. Traditional estate planning is slow, expensive, and controlled by intermediaries. Bitcoin, write down a seed phrase, hand it to your heir, done. Here's what banks don't want you to realize. Crypto is not competing with them. Crypto is replacing them. Not at once, not overnight, but piece by piece. Self-custody replaces bank accounts. DeFi replaces lending. Stablecoins replace wire transfers. Bitcoin replaces store of value. Privacy coins replace cash. Tokenized assets replace securities. Every single function a bank performs, there's a crypto alternative that's faster, cheaper, and gives you more control. And banks know this. That's why they spread FUD. That's why they lobby. That's why they warn about volatility and hacks. Because if you understand these 14 secrets, you might realize you don't need them anymore. And that terrifies them. So, what do you do with this information? First, educate yourself. Learn what self-custody actually means. Get a hardware wallet. Move your crypto off exchanges. Second, use DeFi. Test staking. Try yield farming
with small amounts. See what real returns look like without bank middlemen. Third, tell others. Share this information, because the more people who understand these secrets, the less power banks have over us. Financial freedom is not about getting rich. It is about having options, about not being forced to use institutions that do not serve your interests. Crypto gives you those options. Banks want to take them away. Now you know why. If this opened your eyes to what banks have been hiding, smash that like button. This is the financial education they do not teach in schools, because they do not want you to know. Subscribe for more content that exposes how traditional finance actually works versus what they tell you. Drop a comment. Which secret shocked you most? Did you know banks do not legally own your deposits? Did you know self-custody is actually safer than exchanges? I want to know what hit hardest. And share this with someone still skeptical about crypto, someone who thinks banks are safe and crypto is risky. These 14 secrets might change their entire perspective, because truth always wins. Eventually. I will see you in the next one. Stay sovereign out there.